Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Freshagenda, Ever.Ag's Global Insights team with this week's weekly take. And Steve, we're back this week just talking about the latest GDT event and some of the market updates around the event. A look at trade, some interesting trends in trade, and of course, chart of the week.
Okay, there's a bit to cover, so let's get rolling. Firstly, GDT 380. Really mixed up result here, down 0.9% overall the index, but means nothing unless you dip below the bonnet or the hood, depending where you are. Whole milk powder regular was down 2.7, reflecting the pulse result last week. And we did speculate about this, Joe, whether we're seeing, pulse indicate a trend. Certainly that was the case in skim milk powder, which dipped worst in the C2 contract, down 3%. Butter also took a tumble, and that was more meaningful, I guess, but the prices are bigger, obviously, but butter down also 3%, and cheddar crashed after rising well. So really, in the case of cheddar, we've gone back an event, I think, or maybe two. The last result was probably associated with some sort of tariff issue. Looking at other products where we line up some other things, New Zealand butter against European butter, this is why the GDT averages are meaningless, because GDT put out a butter change, but really you got New Zealand product down and European product up in line with what is a rising market. We'll certainly talk more about that. In terms of mozzarella, that also rose, but mixed results, as you can see, compared to cheddar, which took a tumble. Not shown here is lactose. Lactose fell 13%. That's also very directly a tariff issue after last event surging 17%, given the importance of alternate supplies into China. So really, quite a lot in the detail, Joe.
Yeah, interesting, Steve. It does seem like that event 379 was a bit more of an anomaly than, as you say, part of a trend. But this time around, we did see demand was stronger than the average across all product categories, but particularly in butter. Very strong demand in butter there.
We've seen that a few events.
Yeah, that's right.
I know you love these charts, but I think it was interesting that the opening demand was pretty strong but tumbled away, right? And I think when perhaps the same in skim milk powder, when buyers come along and we're starting at pretty elevated levels and the early rounds suggest it's going higher and maybe they step back, certainly got some price-sensitive buying regions involved in this type of event. So that's probably what happened. I mean, and both powders drifted weaker as a result.
Yeah, quickly lost interest. Whole milk powder has slipped across the contract periods. That backwardation is still very apparent, but, you look out to contract period 5, still pretty good prices out there, Steve, for whole milk powder.
Yeah, quite supportive of where the milk price expectations are in New Zealand.
And in terms of involvement, Chinese involvement was greater than 40% this time around on a smaller tonnage, but a slightly higher overall tonnage sold to China this time around compared to the previous event. So, fairly encouraging trends there from Chinese buyers.
Skim milk powder, we finally lost that Q3 bump, which has been sitting there for some time, which we'd marvelled at. So it's just been pushed later and lower. Yeah, but skim down, when you look at the changes in the third contract, it's quite a bit that it's lost. The differential with other regions, European product really narrowed. I think we talked about the last event was up by 300. Here we're down to $214 a tonne. Bearing in mind the long-term average is only a bit over $100, $119 is the average New Zealand premium.
So still elevated there, Steve.
Yeah.
And interesting, just looking at SGX futures, the result was $110 a tonne below what the futures were pegging prior to the event. So still very strong expectations there that have not been met by this event, Steve.
So the futures market was disregarding the pulse. We speculated may have been setting a new trend. We called that early. Okay. So in skim milk powder, a little bit of a lift in Chinese involvement again, went above a third overall. You can see the tonnage lift there. So we're off the floor. Pretty low volumes though, because we're at the very low of the season.
Yeah, and as Chinese buyers stepped up, Southeast Asian buyers stepped back, Steve. So lower tonnage this time around from Southeast Asia. And in terms of that whole milk powder versus the value of skim and butterfat, the whole milk powder value premium was steady after this event. Whole milk powder a little weaker, EU S&P a little stronger, and of course those butter prices in New Zealand were a little bit weaker.
It's hanging in there, that premium, though, isn't it? It's been there all year.
Yeah, it is. Interesting how long it will last. And in terms of the discount of AMF to butter, we've seen this very deep discount for some time now, slowly clawing its way back, Steve, as that gap is reducing on these latest events. And looking at the comparison for skim milk powder, this GDT result still slightly above futures for the other regions. And again, New Zealand SGX, NZX futures above the GDT in the short term.
So when we're talking butterfat, we've got to look in the background, and European liquids, cream and spot milk have tumbled a bit with the seasonal milk arrivals when you're at the peak when we see these weekly numbers for prices. So spot cream lost a little bit of ground, but interestingly, the strength of forward pricing. Now, EX futures are pretty thinly traded, but there's a pretty strong signal there that expectation, you can go and get that price. That's out there with the right spec product. So futures have moved up quite a bit, and they're well ahead of OTCs, Joe.
Yeah, interesting, Steve. The futures are well above the over-the-counter trades being made, and we looked at this over the last few days. It doesn't really make much difference. Those futures are still well above the trades that are being made. The GDT result for C2 was near $7,350 a tonne in euro terms. So, that's up where the futures are rather than where the OTC trade is at the moment.
So perhaps a bit of the future weather playing into this, Joe, the risk of reduced milk flows as we go later in the year with that really strong drought expectation that's looming.
Yes, one to watch. And where does this leave us? Well, the GDT results last time around, we were marvelling that they were way up near the EX futures. Well, that gap has opened up again, Steve, with this latest result, that the GDT is below EX futures and the NZX futures are below that again. And, of course, the CME with abundant cream and butter supplies in the US well below those regional averages.
And looking at what it means for cheese, a few things here. We've used this before, that the GDT result for mozzarella is shown there, as is the recent EX spot value. So the market's moving higher. The official prices tend to be a little bit of a lag. That's overlaid on what is the fair value, essentially based on fat and protein. So I would think that will continue to lift because we'll see that value rise. A firmer cheese market outlook in Europe is becoming apparent. And when you see the trades going on as well, they're only small volume at the moment, but they're up around a bit over that €4,300 mark. So that's a firmer outlook for European cheese.
Yeah, and just looking at the difference, it's widened a bit with these higher EU prices going forward. You can see that gap really opening out at the end of 2025. Is it enough to win the US the business that they need to balance or to alleviate their balance sheet going
We'll talk
forward?
more about this.
We will.
Over to cheese trade, Joe. Nice segue. We're able to add up global trade, in particular the exports of the major cheese exporters, biggest players, and we don't do the full picture yet, but this is enough to give us a good guide on what's happening with these contestable cheese markets with EU, New Zealand, US and Australian exports in the frame here. So these are the markets, so the regions where they go head-to-head. Q1 trade is obviously picked up there and quite strong because Q4 was pretty flat, really, in terms of these markets, specifically where the contest exists. So in Q1, there's pretty strong growth. US, however, only won 28% of that growth across those regions. When you look at where the gains were made on this second chart, the US small gains, New Zealand dominated the growth here. Certainly took a bit away from Europe, but the Europeans have come back a bit in that Q1 period and losses weren't as great. And Australia's performance is waning a bit. They had a pretty strong year last year. So it's interesting, that the EU is recovering. It took big strides in South Korea, which was probably the most impressive market in terms of overall growth. But Joe, what have you dug up here?
Yeah, we're just looking at when that Q1 trade was written, probably Q4 2024, you'd have to say. And it was a big gap, Steve, in the spot markets between the EU and the US. It was really when the gap in the markets were the widest. So, maybe a bit of an expectation there might be a bit more trade coming through. Surely we expect to see it in early Q2.
US dollars a pound, of course, for our US viewers, but the relativities are apparent. Very interesting.
Yeah, and just another aspect of trade that we're all pretty interested in, China's imports. April imports lifted 4.8% for the month in milk solids equivalent terms, and that's, Steve, is the 6th consecutive month of year-on-year growth. We've seen the most gains in the past 3 months to April. Fats and whole milk powder have dragged on the monthly total for April. Skim milk powder, though, encouraging, up 12% in the 3 months to April. And cheese growth has slowed in the month, but was 17% higher for the 3 months to April. So, a lot of this is kind of pre-tariff. Obviously, the Liberation Day was the 2nd of April, and the Chinese tariffs only moved up from that point. It's going to be interesting to see. We expect a disruption to some of this growth, perhaps, in the coming months, but not seeing it at the moment in Chinese import data.
So, chart of the week, Joe, how will you finish this off?
Well, now for something completely different, Steve. We're over in New Zealand and we're just looking at the milk output data for April. And we probably expected it to be a little bit worse than this. Milk solids output was actually pretty much line ball with last year for April, up 0.1%, and that takes the season to date to 2.7% ahead. In volume terms, it was a little bit down, but only 0.5%. We've seen some pretty good rains through New Zealand over the April period, although there are some regions that are still struggling with dry conditions. But obviously this production is really resilient, and part of that story is that the really strong growth in feed supplementation that we've seen in New Zealand, given that it's a good milk price for this season and a pretty good milk price looking forward into next season. So there's plenty of incentives for Kiwi dairy farmers to keep feeding those cows.
Okay, fantastic. That's all we have for this week. We'll be back again next week. Hope you can join us. And don't forget to have a look on our site, on the portal, the offer of the Global Dairy Insights products, including the fabulous weekly rundown, which is penned by Joanne, comes out each Monday, Milk Production Weekly, as well as a round of trade insights and production reports. So that's a steady flow of intel as things happen. Please contact us if you're interested.